Hey everyone, in this video I'm going to bring you my favorite 9 dividend stocks to buy for passive income investors in June. Actually, these stocks are good for any investor. You don't have to be a passive income investor to appreciate these excellent dividend stocks. So I'll share with you what my picks are. There's a big change this month. I took one stock out of my top stocks to buy list. You're going to want to see what that stock is that I removed and why I removed it. And then I'll share with you the performance of my portfolio of dividend stocks so far year to date in 2024. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, in the first batch of best dividend stocks to buy right now, I've got Visa, which offers investors a dividend yield of 0.74%. And you're going to see a mix here of high yield dividend stocks and low yield dividend stocks. My focus here is on investor income over the long term, not just on dividend yield. So while they are dividend stocks, the dividend yield is only one component of the dividend return. So you have Visa here with the dividend yield of 0.74%. In fact, Visa is my favorite dividend stock overall to buy in 2024. The next one is Altria Group with a much better dividend yield of 8.39%. Altria Group generates a strong profit margin. It's harvesting its cash flows from its business. Of course, the legacy business is in decline and it's working to shift to new age smoking non-combustibles, and while it's doing that, it's harvesting the legacy components. It's driving strong cash flow. Nike offers investors a dividend yield of 1.49%. I like Nike's brand loyalty. I think for the longer term, it can continue to increase dividend payments. Starbucks is the one that I've had on my list all year long, but I'm taking it out. I'm taking Starbucks out. So Starbucks I'm removing. In this video here, I actually informed investors on May 2nd, actually, that I took Starbucks off of my list, but I'm still accounting for it in my results because it had such a big negative return, and I had it all the way up until May 2nd. I've included it in my results so that I can account for the mistakes as well as the good picks in my portfolio. The next one is eBay with a dividend yield of 1.92%. eBay only recently started paying a dividend in 2019, and given its asset-light business model and strong profit margins, I suspect eBay will be an excellent stock for dividend investors longer term. The next batch of stocks start with Target, which offer investors a dividend yield of 2.82%. Target has done an excellent job investing in its stores, turning them into a competitive advantage when 7-8 years ago, investors were worried that those brick and mortar locations were a big headwind for Target. They're now an advantage. That's a big turnaround for a management team to accomplish. Coca-Cola offers investors a dividend yield of 2.96%. Coca-Cola generates pricing power. It has continued increasing prices. Customers continue to pay those higher prices because of the habitual nature of its products and the fact that it has strong brand loyalty. The Home Depot offers investors a dividend yield of 2.59%. The home improvement industry is a massive $1 trillion market dominated by Home Depot and Lowe's, with Home Depot being the leader. The Walt Disney Company recently reiterated its dividend. Remember, it paused its dividend for a couple of years because of the devastations from the pandemic. It now reinstated it, and I suspect it can continue increasing that dividend payment. The theme park segment is thriving, and the streaming segment will become profitable according to management later this year. And finally, Caterpillar, yielding 1.54%. With all of this onshoring, reshoring, and investment spending, construction spending, all of which is benefiting Caterpillar, and that's going to be a longer term trend Caterpillar can benefit from. So I like Caterpillar on this list as well. So if we look at the performance of these stocks, I highlighted already Starbucks was a poor performer, negative 15.31%. After Starbucks reported those disappointing quarterly earnings results, I reviewed those figures and I did not like what I saw from Starbucks, so I took it off my top dividends list. Similar story with Nike. It reported a disappointing quarterly earnings results, but after I reviewed those results, I kept Nike in there because I liked the moves Nike is making to adjust to the difficult circumstances. Starbucks, I wasn't too thrilled with, so I took Starbucks off. I kept Nike in. Visa returned 5% so far year to date. Altria Group, a solid 17.21% return. And eBay thriving with 25.6% year to date returns. In the next batch, the best performer is Caterpillar at 15%, and then Walt Disney Company at 15% as well. Target coming in at 11%. Coca-Cola with 7.64%, and the Home Depot, the only loser in the group, with negative 2.12% year-to-date returns. Now, if you compare my picks with the SPDR S&P Dividend ETF, that total return index has brought 4.69% return. So let me share with you the average return of my portfolio and how it compares with the S&P 500 Dividend ETF. So here is my portfolio, and the average of my portfolio, the return so far year to date, is 6.77% compared to the 4.69% for the Dividend ETF. So my portfolio has outperformed the Dividend ETF by roughly 50%. Again, my portfolios so far, whether it be the top stock, the top dividend stock, top growth stocks, or top 25 stocks, they've all outperformed their respective indexes year to date. But I've been cautioning investors not to expect my portfolio performance to continue outperforming by this magnitude. The factors that have been working in my favor could go against me in the second half of the year, just as well as they've been going in my favor for the first part of the year. So don't expect this level of outperformance to continue. It's been very nice. I'm thrilled with the performance year to date of these picks. Some of the stocks that I've been disappointed with, including Starbucks. Starbucks I removed from my list. The others have been on my list all year long, and I haven't had to remove any of them. The performance has gone either as I've expected or better than I've expected in the case of eBay, delivering 25% year-to-date returns. I would have been happy with that kind of return from eBay for 2 years, but eBay's given me that return in a little less than 6 months. So an excellent return year-to-date so far. Hopefully they continue performing as well as they have been. I will continue updating you on this pick, and I will continue letting you know within the month as I review these companies. If there's a change and I take it off my list, I make a video and I report that to you. So make sure you follow all of the videos and you'll be up to date on all of my top stock picks, additions, removals, etc. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.